I will say when a spot Bitcoin ETF is approved, because I think the probability is, well, we think it's 95% now, if not higher.
Wow.
I do think the macro environment is going to be good, not for all technology, including blockchain technology. So and crypto assets. So yes, we're very optimistic. As I said, nothing goes straight up, and you'll have hedge funds playing the big surges, but truth wins out, and we think the move into this new asset class will be inexorable. So pretty excited about that.
ARK Invest CEO and founder Cathie Wood believes there is a 95% chance that crypto explodes in 2024. Why? She now has 95% certainty that a spot Bitcoin ETF will be approved by January 10th, the final deadline for the SEC to come to a decision. This is notable because not only do behemoths such as BlackRock and Fidelity have a spot Bitcoin ETF application, but Cathie Wood and ARK Invest do as well. This means that Cathie would know better than most if the odds of approval were likely or not. In her latest interview, Cathie breaks down her entire Bitcoin ETF situation and her outlook for crypto in 2024. Make sure to stick around to the end of the video where Cathie explains why the macroeconomic environment is set up so perfectly for crypto in 2024 and why she is expecting to see deflation. Also guys, only a small percentage of my viewers are actually subscribed. If you enjoy finance content, consider subscribing or liking the video. It's free and you can always change your mind. Now here's Cathie Wood with her crypto 2024 outlook.
I will say when a spot Bitcoin ETF is approved, because I think the probability is, well, we think it's 95% now, if not higher.
Wow.
Yes.
Specifically in the early January window, or just,
we think it's very high. Ophelia, you might have a lower odds here. I don't know, but all the signals are, it could still, there could be still some details which would force the SEC, our ARK 21 shares deadline, January 10th, is the forcing function here. And is there a scenario where the SEC would come to all of us in line and say, okay, we've just discovered this, we didn't know about it, we would like you to, or we would like to push all these decisions back up to them. I don't know, but so far, so good. I don't think, I know that the cash versus in-kind, create and redeem, is an issue here, but, and we can talk about that later, but I think a couple of things happened, especially something 5 years ago in 2018. Cambridge Associates, which is a consultant to institutions, endowments, foundations, and so forth, wrote a paper about Bitcoin and said to the institutional world, okay, you may agree with all of these leaders who are calling it a Ponzi scheme or an environmental scourge on the system, but recognize that the correlation of risk and return between Bitcoin and all of these other assets is very low. So what we probably have here is a new asset class. And what institutions do know is that the best way to increase returns per unit of risk is to diversify into a new asset class. So this is very important. And so Cambridge back then said, you may not like it, and you may really believe all these people who are saying these horrible things about it, but this is the way it's behaving. And our study, and we've put this study out, we're updating it now, on what should be the institutional allocation in a broad-based portfolio to Bitcoin. If you want to, this is as of last year, we're about to publish new numbers, but as of last year, if you wanted to minimize volatility, the optimal weight of Bitcoin in your overall portfolio would be 2%. If you want to maximize your Sharpe ratio, so your return per unit of risk, then the number is closer to 6%. And this kind of makes sense because I remember other new asset classes, real estate very early in my career. So 70s and 80s, real estate was the new asset class. And institutions started with a 1% allocation and then gradually moved up to that 5-ish%, maybe above. And then emerging markets, when that became a category, because it wasn't one emerging market at a time, but it was a category, a new category. Again, started with 1 and moved up to 5%. That, we believe, is what is going to happen here. And I think the fact that we and others are educating institutions that, wait a minute, this is mathematically metered to go up to 21 million units, and we're at roughly 19.5 million. The scarcity value is already showing itself. And with institutions starting to push in, that will be ever more true. So might we get a sell on the news? Well, sure, we've had a nice little burst here, and there's just the hedge funds trade on anything, on any news. So you could have a bit of a sell-off, but we think that the institutional demand is going to take this new asset class much higher in terms of market value. Yes, and if you look at the performance of Bitcoin over rolling 3, 5, 7-year periods, it is the top performing asset. And overall, those periods since its inception, it's the top performing asset out there. So institutions cannot dismiss it unless they think there's they know something that nobody else knows, and I doubt they do, about the underlying technology. Even the risk of a hack, teaching them about, okay, this is the base layer hacks have been de minimis. Philia, correct me. It's the layer ones. It's not the base layer, it's the layers on top that have been hacked effectively. And once they understand that, they have to step back and reassess it because, base layer Bitcoin is where they will have the exposure, right? In cold storage. It depends on which issuer, but in our case, at Coinbase. They have to have been looking at this. I mean, we've certainly been putting the research out, but they needed the regulatory seal of approval, and that will be the SEC approval of a spot Bitcoin ETF, because if it's good enough for the retail investor, again, the SEC is really thinking about the retail investor. If it's safe enough for them, then institutions certainly should not dismiss it as a new asset class. I think the seal of approval from the SEC, especially given how vociferously the SEC who has said, I think has made incorrect observations. We know the people in the research department at the SEC, the crypto research department, they are very good. They know what they're talking about. And I think some of what we've witnessed out there has been much more political in nature than grounded in fact, but it has confused and obfuscated. And institutions do not want to get in the way of that kind of dogfight, right? Now they've got the judicial system on their side. Okay, check. Legislative side is starting to move in the right direction. So these are all sources of confidence, I think, for the institutional investor, which is a very conservative investor. We have grown up in a world and that has gone very benchmark sensitive. They don't want to put anything in their portfolios that isn't in a benchmark. I founded ARK for that reason, because there are so many exciting companies and opportunities out there that aren't in benchmarks, and certainly Bitcoin isn't. So this again is one of the reasons I founded ARK. But we needed the checks of the checks and balances for institutions to really say, okay, it's safe now. I think that, again, just having gotten to know some of the researchers at the SEC over time, I've been impressed that they really do want to learn from us. And, I also was impressed. So Michael Saylor, I remember in the early days, when he was putting Bitcoin on his balance sheet, and, I just chatted with him and said, hey, have you talked to the SEC? You really should, because you do not want to be shut down in your current form and become an investment company. And he did, and they directed him to FASB, and he did a very good thing for Bitcoin in terms of now it is not considered an intangible asset, and there will be mark to market, so much healthier treatment. So, I think they've been. I think they've been forthcoming in their interest in understanding both Bitcoin and Ether, and pretty intensive in their study of it. So I will, Ophelia is the odds maker on this one, but I would agree with her. It's probably a go in 24. I think there are too many indicators out there, not the least of which is the yield curve, which has been inverted, meaning long rates are lower than short rates for longer than at any other time in history. And any other time this has happened, we've ended up in a recession. And they are beginning to hear from industrial America in particular, things are not good. And China's exporting deflation to the United States. So Temu, Shein, and everything, which is of course hurting retail profit margins as well. So companies are losing pricing power. The Fed wanted inflation at 2%. They're going to see negative inflation. And I think that's why they're changing their tune. They're going to see negative inflation in 2024, I believe, for the CPI. If you technologically enabled innovation is deflationary, it's very comfortable in that world. What is not comfortable are companies and industries that have gotten used to pricing power. And if you look at some of the crazy price increases that Staples companies, especially Staples, and some healthcare companies, they got used to those, and now they're going to have to drop all those prices, and they have not adjusted their cost structures. There's going to be a lot of pain in terms of profit declines in a declining price environment, but not for tech companies. This is their comfort zone because technology follows learning curves, which are characterized by cost declines, which are passed through into price declines. So it's a very natural environment. And that's a good deflation. It causes booms in unit growth. The bad deflation will happen to those companies that haven't invested enough in innovation, or have been fighting innovation, or have been catering to short-term oriented shareholders who want their profits now and their dividends now and their share repurchases instead of investing in innovation. They're going to have obsolete products, and they will have to cut those prices in order to clear the shelves.
How about for crypto, Cathie? What do you have any predictions for 2024? So it feels like we are in the early stages of a bull market, right? With Bitcoin above 40K, and we've got the ETF on the horizon. We've got some other things. Do you think 2024 is going to be, and maybe the Fed pivot, as you said, do you think 2024 is going to be a good year for crypto assets?
I do think the macro environment is going to be good, not for all technology, including blockchain technology. So and crypto assets. So yes, we're very optimistic. As I said, nothing goes straight up, and you'll have hedge funds playing the big surges, but truth wins out, and we think the move into this new asset class will be inexorable. So pretty excited about that.
So there's Cathie Wood and her confidence in a spot Bitcoin ETF being approved by the SEC. This signals a potential turning point for the crypto industry in 2024. An approval could pave the way for mainstream adoption and institutional investment, potentially driving significant growth in the crypto market. Cathie's insights into the macroeconomic factors favoring crypto in 2024, especially her expectation of deflation, offer a contrarian perspective on how economic trends could influence the crypto space. Her expertise and the involvement of major players like BlackRock and Fidelity underscore the seriousness and potential of this development. If you found this video informative and are keen on staying updated with the latest in finance and crypto, remember to subscribe and give this video a thumbs up. Your support helps us bring more content to you like this. Anyway guys, hope you all enjoyed today's video and that provided you with some value. I'll see you all on the next one, and as always, all the best.